Thank you. Hello, everyone. Welcome back to the live virtual classes on transfer pricing. For today's lecture, which also happens to be the last lecture for transfer pricing, these are the specific topics that we will be covering. So after the transfer pricing methods and the practical aspects relating to transfer pricing that we discussed last evening, today we will be discussing these aspects on what are specified domestic transactions, and then we will go into transfer pricing documentation. Now, these are the two topics that we will be discussing, and after that we will get into dispute resolution when it comes to transfer pricing. So under dispute resolution we will discuss what happens when a matter relating to transfer pricing is referred to the transfer pricing officer. Then there are some mechanisms called as safe harbor rules and APAs, which are advance pricing agreements. Now, these advanced pricing agreements is something which is a dispute resolution mechanism, and it is very, very specific to transfer pricing. That is what we will be discussing. After that, we'll do secondary adjustments. If you guys remember, we discussed primary adjustment. We discussed something called as transfer pricing adjustment. Transfer pricing adjustment is also casually referred to as primary adjustment. And after that, we will be discussing what is secondary adjustment. After that, we will be discussing the limitation on interest deduction. So this is section 94B of the Income Tax Act that we will be discussing. And after that, we will be discussing the penalty under transfer pricing. Now, the penalty provisions that we will be discussing are solely related to transfer pricing cases and not otherwise. So that's really the topic or all that we will be discussing for today. Really small topics, but a lot of topics is what we will be covering. So the first topic that we will be starting up with is what are specified domestic transactions. Now, this particular terminology and this particular concept is provided in section 92BA of the Income Tax Act. That is what is a specified domestic transaction. Let's say what exactly is a specified domestic transaction. Now, if you actually see section 92, it actually came into place whenever there is, mispricing, or whenever there is income which is coming from an international transaction. It says that, section 92 says that it has to be undertaken with regard to the arm's length price. Now, the same thing is that, even in case of domestic transaction, there could be mispricing. There could be a tax arbitrage out there. Can anyone tell me, give me an example, how a tax arbitrage situation or, like a tax avoidance situation, etc., can happen in terms of a specified domestic transaction?
Underpricing or overpricing of goods or services.
Yes, that's correct. So, in case of domestic transactions also, there could be mispricing that can happen. Let's take an example. Let's say that there is, one entity, and this entity is in a domestic tariff area. The other entity is in a non-domestic tariff area. Meaning to say, we also have, these kind of situations where one entity is in an SEZ kind of an area, and the other entity is in a non-SEZ kind of an area. Now, what they'll actually do is they'll actually transport, and they will also shift their, profits from the non-SEZ unit to all the SEZ units. Why? Because there might be a tax holiday which is given to the SEZ units out there. So they'll try to shift all their profits to the SEZ unit. This is exactly the same concept like we discussed, which is called as shifting of profits from high tax jurisdiction to low tax jurisdiction. The same kind of concept. And this is the reason, just to make sure that there is objectivity in case of domestic transactions also, they've come up with a concept which is called as specified domestic transactions. So what are specified domestic transactions? Well, the rules basically say that, whenever you have, a transaction between an SEZ unit and a non-SEZ unit of a particular assessee, let's say that if you have a transaction between, let's say, a tax holiday unit and a non-tax holiday unit of the same assessee, well, then there is something called as specified domestic transaction, which will be attracted. It basically says that whenever there is an allowance for an expenditure or interest or allocation of cost or expense or any income in relation to the specified domestic transaction, that should also be determined with respect to the arm's length price. Meaning to say that in respect of domestic transactions also, in respect of specified domestic transactions also, as in, the transaction between tax holiday unit and non-tax holiday unit also, if there is a transaction which is happening, you have to make sure that that is also happening at the arm's length price. That is what section 92 subsection 2A basically says. So where am I getting this concept that, this is only applicable on tax holiday unit, etc.? Well, this is coming from section 92BA. And section 92BA, this is what section 92BA, really says. It says that whenever there is a transaction which is referred to in section 80A, and, I've mentioned all these transactions in the notes right here. Section 80A transaction is basically, whenever there is an inter-unit transaction of business which is carried on by, one entity to another entity, as long as they're claiming that particular exemption out there. Then there is section 80 IA8 kind of transaction, whenever there is a transfer of goods or services of entities which are referred to in section 80 IA8. Now, this is where I've just mentioned it here. 80 IA8 is deductions in respect of profits and gains from industrial undertakings or enterprises engaged in infrastructure development. So, whenever you have under section 80 IA, it basically says that whenever you have an entity which is an industrial undertaking or, an entity which is in infrastructure development, they get a tax holiday of 100% of profits. 100% of profits are, exempt from tax. That is the deduction, that is provided. So that is if these are the transactions that are there, or 80 IA8 subsection 10 kind of transactions are there, or transactions which are, under section 115 BAB or BAE, etc. Now, anyone who knows section 115 BAB? What is section BAB, 115 BAB? Very lately it has been introduced.
Ma'am, concessional tax regime for domestic manufacturing company.
New
Yes,
manufacturing.
exactly. Yes. Both of you're correct. So if there is a new manufacturing domestic tax domestic company, there is a, like a specific percentage for them also. Otherwise, if there are certain new manufacturing cooperative societies, they are covered under 115 BAE. So all these transactions, what they're really trying to say is that if these kind of tax holiday transactions, they happen and happen between whom? Well, if they happen between, let's say for one assessee, there are two units. There is an eligible unit and there is another unit which is in a domestic tariff area. If these kind of transactions happen between them, or if these transactions happen between an eligible business and any other assessee with which these are associated, well, then there will be specified domestic transaction provisions that will be applicable. Now, is there a threshold to it? Yes, there is a threshold of 20 crore. So what you'll do is you'll add up all these transactions and you will see only if the value of these transactions is more than 20 crore rupees, only then this kind of concept will be applicable. So this is what specified domestic transaction is. Now, the thing is, how do we calculate the arm's length price in case of specified domestic transaction? Well, for this, if you read through section 92BA, it says for the purposes of section 92, 92C, 92D, 92E, in case of specified domestic transactions, these are the transactions that are actually provided. So what they're really trying to say is that, how you compute the arm's length price, and whatever are the methods, the 6 methods that I have for computing the arm's length price, and whatever is the documentation that is available for international transactions, the Form 3CEB that we'll discuss today, and the TP study, etc., everything will remain the same for specified domestic transactions also. So this is what they're actually trying to say. But what are the transactions that will be included? Well, tax holiday transactions. And now you know why they talk about tax holiday, transactions, because they talk about just specific sections like 80A, 80IA 8, 10, 15 BAB, any transaction which is referred to in section 10 AA. So I've written all those, 10 AA is basically special provisions in respect of newly established units in special economic zones. So basically units that are there in SEZs, etc. For them, 10 AA is applicable. So I've mentioned all these, sections out here. If these are the transactions, and if the aggregate of these particular transactions exceeds, 20 crore, well, then this will be applicable. Do you know what was the situation before the amendment in SDTs? In 2016, they came up with an amendment in SDTs. Anyone who knows? What was the threshold before this? Okay. So,
One
sorry.
crore.
Okay, it was around that. It was about 5 crores. So what they actually did was initially it was, the concept of specified domestic transactions was not just restricted to, these tax holiday units, but it went a little beyond. And what was that? They said that even if transactions are 40A to B transactions, if you remember 40A to B transactions, disallowed expenditure when expenditure or payments were made to specified persons. So those kind of, they are disallowed under PGBP. So they basically said that even these kind of transactions will be covered for the purposes of specified domestic transaction. And the threshold then was much lower. It was 5 crore rupees. So what you had to do, you had to add up 40A to B transactions. You had to add up all these transactions. And if the threshold was 5 crore rupees, well, then specified domestic transaction would have been applicable. As in domestic Indian transfer pricing would have been applicable, and you had to, file all the compliances and do everything, and, use the methods to substantiate that specified domestic transactions is at arm's length price, etc. But then they came up with an amendment in financial year 2016 and 17, and they said that no, we'll delete 40A to B transactions, and now only if the aggregate amount exceeds 20 crore rupees, not 5 crore, exceeds 20 crore rupees, then only SDT provisions will be applicable. So do you think the scope has become less or more? The scope for SDTs?
बढ़ा दिया है
स्कोप कम हो गया?
मैम कम हो गया
पहले
क्योंकि 40 वाली ट्रांजेक्शन भी चली गई और मैम टर्नओवर की लिमिट भी बढ़ गई
एग्जैक्टली
तो कम हो गया
एग्जैक्टली पहले बहुत सारे क्लाइंट्स आ जाते थे जिनकी 5 करोड़ के ऊपर 6 करोड़ की ट्रांजैक्शन हो जाती थी और एसडीटीज लग जाता था. बट नाउ we've got clients only if they exceed 20 crore, only then SDT will be applicable. Yeah. So this is what I've provided in all these slides. What I'd suggest you to do is go through this particular slide also. If you go through this particular slide, it will just say when the concept of specified domestic transaction will be applicable. So this slide, I think, will help you, revise through in exams. I think if you find the slides that have, which I use to explain concepts, if you find this interesting, I will also be sharing the slides also, with you guys. And slide deck ke saath saath, I will share the slide deck in PPT mode only. So what you can actually do is every time you will see that there will be some notes here. If you see this kind of slide, if you see all these slides, there will be some notes here. So if I send you the PPT version, you will also be able to view these notes. तो अगर मैं PPT version भेजूंगी तो फिर ये वाले notes भी view हो सकते हैं, and that will वो exams में भी help करेंगे. This is the reason I will be uploading this and I will be sharing all these with you guys. Any questions with respect to SDTs?
Ma'am, earlier when the 40A2 transactions were covered in SDTs, but they were also covered in PGBP. So there would be 2 times disallowances basically. So how would then the working be done then?
No, they're not disallowed for the purposes of SDTs. But what they're only trying to do is they're just trying to say that one, you have to substantiate. We are not disallowing it. They are under transfer pricing, just saying that you have to substantiate that this is at ALP. Now, if you just presume that they are disallowed, then you're directly telling them that this is not at arm's length price. So, for the purposes of SDTs, one, the purpose was to just calculate whether SDT is applicable or not. And then the second step is to, identify if they are at arm's length, as in, justify if they are at arm's length. So, instead of, just outrightly disallowing these transactions, it was more like an opportunity that is given to the taxpayer to substantiate using TP study, etc., that these are at arm's length and they should not be disallowed that ways. So, yeah. Any question? Was that useful?
Yes, ma'am.
Sorry. Yes. Okay. Sorry.
मैम एक क्वेश्चन था मैम।
हाँ जी।
जी मैम, मैं ये कह रहा था कि मान लीजिए मैम, जो हम 40A में जो हम रिलेटिव्स को पेमेंट करेंगे वो हमारी आर्म्स लेंथ प्राइस पे है, और उनका वो हम डिसअलाउ नहीं करेंगे फिर उस सेक्शन में, तो फिर उसके लिए मैम हमें टीपी भरने की जरूरत नहीं है?
अब नहीं है।
अब नहीं है, मतलब करंट सिचुएशन में हमें नहीं है। पहले होती थी, अगर जब 5 करोड़ से ज्यादा का अमाउंट जाता तब हम भरते।
यस।
अच्छा, ठीक है, ओके।
अब मैंने ये क्रॉस करा ना, मैंने ये हटा दिया। अब ये जो क्लॉज था इधर से 92BA से, ये वाला जो 48(2B) का क्लॉज है, ये बिल्कुल ही कैंसिल आउट हो गया। बट फिर भी आई वांटेड टू टेल यू गाइस कि क्या पोजीशन था बिफोर। तो मैं बताना चाहती थी कि अमेंडमेंट क्या थी जो पहले थी, बिकॉज आई थिंक इसके लिए बहुत सारे लोगों को कंफ्यूजन था कि 48(2B में भी ट्रांसफर प्राइसिंग लगता है एक्सेट्रा। तो मैं वो बताने की कोशिश कर रही थी कि अब वो डिलीट हो चुका है, काफी टाइम हो गया डिलीट हुए हुए। इट्स बीन 2016-17 that it was actually deleted, but now we don't take this into consideration. Now it's only part of PGBP. Okay. Any other question? Okay, great. Now we move to the next topic, which is transfer pricing documentation, something that is of interest to all the CAs, because this is where the role of chartered accountants, I think, come into play also. And I think this is the role of transfer pricing documentation. So what transfer pricing documentation, when I say documentation, it basically means, filing all those compliances, etc. So what does, a transfer pricing documentation does? It basically helps the multinational companies protect them from, penalties out there. How does it protect them from penalties? Because transfer pricing documentation does two things. One, there is a legal obligation. So if you don't file for transfer pricing compliance, obviously there will be, penalties. So there could be, imprisonment also under the act, etc. So it protects you from all these penalties, etc. And then the second thing is it will justify your transfer pricing policy. So going forward, if your case gets opened up under, scrutiny or something like that, a department assessment or something like that, then that this particular TP study, this particular form that you have filed, it will just protect and it will just justify that the price that we had actually undertaken this transaction at was at the arm's length price. So now I will tell you about two documentation things that we do. The first one is called as Form 3CEB, and just write it in your notes. The first one is Form 3CEB. This is Form 3CEB. This is the first thing that we have to do. This Form 3CEB was what I was saying. This is also called as the accountant's report. And this is also, some people also call it the transfer pricing return. Just like income tax return, we also have something called as transfer pricing return. But in law or wherever, you will never find this terminology being used, transfer pricing return. No one will, no, in law, it's not written as transfer pricing return. It will just be mentioned as accountant's report, or we also call it Form 3CEB. Now, if you look at Form 3CEB, it's a very, very concise document. There are three parts to Form 3CEB. There is part A, there is part B, and then there is part C. In part A is, before part A also, it's more like a declaration from the chartered accountant. It's only practicing chartered accountants who can, file Form 3CEB on behalf of their clients. And this particular accountant's report is like a certification, that the chartered accountant is basically certifying that whatever transaction has happened, it's at ALP and it's true and correct. So that is all, that the chartered accountant basically certifies. So in part A of this particular report, it's a very, very small, document. In part A of this particular document, they'll first start with what is the name of the assessee, PAN number of the assessee, international transactions of the assessee. So you say yes. How many, sorry, just give me a minute. I have questions on the, I think, chat box to explain provisions of SDTs again. I think just allow me some time. I'm on to documentation right now, and towards the end of the lecture, I'll, just explain this to you again. So we can wait back and I'll explain it. So yes, coming back, this is basically the accountant's report. And I was saying that in accountant's report, it is basically part A. So in part A, they will say name of the assessee, what is the, the PAN number of the assessee, what are the value of international transactions for the assessee. So, what you'll do is you'll just add up all the international transactions and then you will, put the value there. Then it will say what is the value of specified domestic transactions for the assessee. So if you have SDT applicable, you will say that, it is, let's say 21 crore, you'll add that there. Then it will say that do you have associated entities? I will say yes. Then it will ask me about the name of the AEs, then the location of the AEs, then by what clause. You remember those 13 instances that we were discussing? So it will ask by what clause are all these associated entities associated to you. And that's about it. So part A is very, very basic information. This is only that part A will actually talk about. Then there is part B, which is international transactions. And then there is part C, which is specified domestic transactions. In case of part B, what it will actually say is that, now that you have transactions undertaken, what is the transaction that you have undertaken? I say that I did provision of service. I gave services. I, as an Indian company, gave services to my USA company. So it will basically ask me, what is the name of the AE to which you have given service? What is the kind of service? What is the volume of that particular service? What is the amount which is as per the books of accounts? What is the ALP? And what is the method that you have used? So I don't have to write anything. It's just drop down box and I will just, fill in all the information using that. Similarly, for all the services that have happened, I'll do the same exercise. And then for specified domestic transaction also, I will do the same exercise. So what you have to essentially do is give a very, very concise information in this particular Form 3CEB. That's the role of Form 3CEB. So you just have to provide the name of the method out there, and that's about it. That's Form 3CEB or the accountant's report. Any questions? This is how the first page of Form 3CEB looks like. And it's a very, very concise document. Do you know the date by which Form 3CEB is to be filed?
Ma'am, 30th November.
Yes, there used to be a date called 30th November before that, but it's actually 1 month prior to 30th November. Now it's 31st of October. So Form 3CEB is to be filed by 31st October of a particular assessment year. That's really the date. So yes.
उनकी मैम रिटर्न 30 नवंबर को जाती है ITR.
Exactly. तो ये इसका जो डेट है वो 1 महीना पहले होता है. It's 1 month prior to that particular date. And this is the reason it's 31st of October. Any questions? Okay, great. The next document that you have to file, remember I was started by saying that there are two documents. The first one is Form 3CEB, which is the accountant's report. And the second form that you have to file is something called as the TP study. Now, I forgot to tell you that, accountant's report is something that you have to file mandatorily even if there is a 1 rupee transaction. Meaning to say, अगर मेरा 1 रुपए का भी transaction हुआ, even if I have 1 rupee of transaction with my associated entity, I have to mandatorily file the Form 3CEB. There is a mandate out here to file Form 3CEB. So even if I have a transaction of, let's say, 50,000 rupees or 1 crore or 21 crore or whatever amount, I still have to file Form 3CEB with the income tax department. So I will log in with my PAN, etc. and I will file Form 3CEB just as I do for, the income tax returns out there. The next document that we have to do is something called as the TP study. Now, TP study is coming from section 92D, read with rule 10D out there. Now, what is TP study? TP study is basically a very, very detailed document. As I think told you also, if Form 3CEB is like a 10-page document, TP study goes to about 300 pages, 400 pages, etc. Because there is a lot of detail that goes into a TP study. What kind of detail? Well, the first thing that I'm going to start up with is to tell them about my, company out there. So the first thing that I will say, sorry, I've just gotten a message which says, is it only for purchase and sales? What is only for purchase and sales?
मैम टीपी की जो रिपोर्ट होगी मैम उसको पेमेंट और रिसीट पे भी एप्लीकेबल होगी या फिर सिर्फ पेमेंट परचेज और सेल्स पे?
सबके ऊपर एप्लीकेबल होगी. इफ यू रिमेम्बर, हमने वो इंटरनेशनल ट्रांजैक्शन पढ़ा था कि इंटरनेशनल ट्रांजैक्शन सब कुछ होता है, परचेज, सेल, रिसीट, पेमेंट, रीइंबर्समेंट, इशू ऑफ शेयर्स, लोन ट्रांजैक्शन, गारंटी ट्रांजैक्शन, कोई भी ट्रांजैक्शन हो सबके लिए फॉर्म 3CEB भरना है. एज लॉन्ग एज इट इज एन इंटरनेशनल ट्रांजैक्शन, सबके लिए फॉर्म 3CEB भरना है. सो आई मेंशन्ड इट हियर. कुछ भी हो, finished goods, raw materials, service transaction, even if it is a deemed international transaction, उसके लिए भी Form 3CEB है. Lending, borrowing, guarantee transaction, capital transaction, business restructuring transaction, SDTs, etc. सबके लिए Form 3CEB भरना है. Now, coming back, there is TP study, and TP study is actually filed, it is actually maintained, and it starts with the ownership structure of the company. So the first thing that it will say is, what does your, taxpayer do? What does the client do? What does the, the company do? So I will tell them that this is what the company does. Then it will tell me, what are the associated entities? I will tell them that, these are the associated entities. Either associated entities incorporated हैं, ये associated entities करते हैं, और मैं पूरा ownership structure दूंगी. That, this is the shareholding pattern. This is the parent company. This is the subsidiary company. These are the subsidiary companies, etc. I will tell them about the business transactions, about the business of the subsidiary company and the business of the parent company also. After that, I will give them very transaction specific details, in the sense that I will tell them the first transaction is, as an example, let's say the first transaction is provision of services. So the first information that I will actually give them is information on provision of service. So I will say that, this is the service that was actually provided by the Indian company to the USA company. I will write everything about the service. I will say that there was an intercompany agreement और उसमें ये सारा कुछ service के बारे में लिखा था. I will tell them about, the value of the transaction. I will conduct a detailed FAR analysis. Then if you guys remember, I will also tell them that, this is the tested party, etc., the FAR analysis. And after that, I will tell them that, this is the transaction that happened and what is the most appropriate method. So now, if in the TP study, I somehow feel that the most appropriate method, and this is what I had written in Form 3CEB, that the most appropriate method was TNMM. In Form 3CEB, I just mentioned TNMM, and that's about it. In the TP study, I will say why COP is not the correct method, why RPM is not the correct method, why CPM is not the correct method, why other method is not the correct method, why PSM is not the correct method, and then I will tell them why TNMM is the best method out there. So what I'll do is I'll give them a reasoning. मैं उनको एक रीजन दूंगी कि बाकी सारे मेथड्स रिजेक्ट क्यों हो रहे हैं एंड ये मेथड क्यों एक्सेप्ट हो रहा है. ये सारी रीजनिंग मैं उनको इसमें दूंगी. एंड आफ्टर दैट sorry and after that, after giving them all these reasonings, I will come to the conclusion that TNMM is the best method. Now for TNMM, I will tell them how I selected the tested party. After that, I will say that this is the database that I actually went to. This was the database. I selected maybe Proves Capital Line. When I first opened the database, there were 35,000 companies. Then I filtered down the companies using qualitative and quantitative factors, etc. So now these are the companies that I have. Then I will also give them the entire margin computation for my company and for the comparable company. Then I will also calculate the arm's length price, the range, etc. So it becomes, there are so many details that actually go into the TP study that it becomes a very, very detailed document. So all these information are provided in the TP study itself. So I've mentioned information here, but that is what is provided in the TP study. Any questions?
मैम यहाँ पे ड्रॉप डाउन होता है या फिर डिटेल में
नहीं, ये तो अपने आप डॉक्यूमेंट बनाते हैं. ये डॉक्यूमेंट इज लाइक अ वर्ड डॉक्यूमेंट. मैं अपने आप वर्ड पे जाऊंगी, माइक्रोसॉफ्ट वर्ड पे, और मैं ड्राफ्ट करना शुरू करूंगी ये डॉक्यूमेंट.
तो मैम ये लिखते हैं ना, जैसे ये ऑडिट रिपोर्ट बता रहे हैं, तो क्या ये भी हमारे थ्रेशोल्ड लिमिट में आता है? मतलब टीपी के ऑडिट भी थ्रेशोल्ड में आते हैं, काउंट होते हैं?
मैं अभी बता रही हूँ. Yes, they will read 400 pages. I have a message on the group. Will they read 400 pages? Yes, they will read 400 pages. And I will tell you why. Now, one very, very interesting thing about TP study is that TP study is only required if your transactions exceed 1 crore rupees. So, अगर transaction value 1 crore rupees से ज़्यादा है, तभी TP study बनेगी, otherwise नहीं बनेगी. And one another thing that I want to tell you about TP study is that the law says that you have to maintain TP study. We don't file TP study. So when it comes to Form 3CEB, we file it on the Income Tax Department's portal. हम portal में login करेंगे and we file the TP document. We file the Form 3CEB there. But for TP study, the law says that you just have to maintain it. So every year we have to maintain the TP study. हमारे को कहीं file नहीं करना. We don't have to file the TP study anywhere. We just have to make sure that it is with us. It is with the client. It is just there out there. And that's about it. You don't have to file TP study anywhere. You just have to keep it with yourself. So what is the benefit of TP study? हम रखें भी क्यों? Why should we even maintain it?
मैडम असेसमेंट के लिए.
एग्जैक्टली असेसमेंट के लिए, बिकॉज बाद में जाके जब असेसमेंट खुलेगा देन यू कैन नॉट जस्ट मेक अ टीपी स्टडी. So you have to maintain it by the time that you actually certify it. And one other reason that as a chartered accountant, when I will actually certify, when I will file Form 3CEB, it will actually ask me what is the method. Now where is all the information coming from कि कौन सा method है, क्या है, वो सारा कुछ TP study में available है. So I would not want to take that risk of filing Form 3CEB saying that it is TNMM method and later on I find out that TNMM method was not even applicable.
एथिक्स के, प्रोफेशनल एथिक्स के रिक्वायरमेंट के लिए भी रखना है मैम कि अगर हम काम करते हैं तो अपने क्वालिटी, जैसे पीयर रिव्यू वगैरह होते हैं तो मैम उसके में भी मांगी जाएंगी.
Exactly. And I can tell you that it is a big, big risk on a practicing chartered accountant if they don't maintain the TP study with the Form 3CEB itself. So it is very important. I do understand that you don't have to file it anywhere, but at least it is a mandate to actually maintain the TP study itself. And it is maintained for a period of 8 years out there. So that is basically the TP study that you have to maintain. Any questions? So ये हो गया दो डॉक्यूमेंटेशन, टीपी स्टडी एंड फॉर्म 3CEB. एनी क्वेश्चन? Okay. Now, OECD Action Plan 13. I'm sure you might have heard about BEPS Action Plan 13. Everyone knows about BEPS actions,
नहीं मैम।
international tax.
मैम आई थिंक वो वाला चैप्टर होना है,
Oh, okay.
एप्स
So,
वाला।
yes, action one is digital taxation, but there are a lot of action plans. So 15 action plans हैं OECD के, and action plan 13 talks about OECD three-tier documentation approach. Now, just listen to me carefully. Even if you've not done that particular BEPS action plan, it's absolutely fine. We'll discuss it here. Now, what happens is that, these two documentations were there in India. We had Form 3 CEB and we had the TP study. Now, OECD said that you have to maintain a three-tier documentation structure. What does it mean by a three-tier documentation structure? It says that whenever transfer pricing is applicable onto you as a taxpayer, then you should maintain three kind of documents or three kind of reports. The first one is master file. The second one is local file. And the third one is called as the CbCR, which is the country by country report. It's all provided here. So now the thing is, what is master file? Master file is like a high level overview document. I've written all these three here also. If you see the first one, let's start with, let's say, the local file. Now, local file basically means, let's say, that there is a company, multinational company. This multinational company is headquartered in Germany. So parent company is in Germany, and then it has branches. Let's say one branch is in India and one branch is in China. Now, this particular local file basically says that you have to file something, as Germany company, you have to maintain a local file and file it with German tax authorities. The Indian company will maintain a local file and it will file it with Indian tax authorities. The China company will, make a local file and it will, file it with like the local department there, which is the Chinese tax department out there. So that is basically the local file. Now, what does the local file have? Local file has very, very specific documentation that, if Indian company has done transactions with the German entity, if Indian company has done transactions with the Chinese entity, all this information will be provided in the local file itself. So all the small details that, what is the transaction, what is the method, etc., all will be provided in that particular local file. Do you think local file resembles something? Local file is something that we discussed.
नहीं मैम।
Form
Local
3
file,
CB,
not 3 CAB.
Part B of Form.
Local file looks like the TP study out there. Does it not look like TP study? Local file, because it has material, related party transaction, entity specific details, etc. Does it not look like this kind of transaction, this type of document? सो लोकल फाइल में आपको हर एंटिटी का, आपको हर ट्रांजैक्शन की डिटेल्स देनी है कि कौन सी ट्रांजैक्शन हुई, किस मेथड पे हुई, कौन सा सॉफ्टवेयर यूज हुआ. सो इंडियन एंटिटी अपनी इंडियन अथॉरिटीज के साथ फाइल करेगी, चाइना अपनी अथॉरिटीज के साथ फाइल करेगी कि चाइना वाली एंटिटी ने कौन सी ट्रांजैक्शन करी, किसके साथ करी, किस मेथड पे करी. एंड देन द जर्मन एंटिटी विल फाइल दैट पर्टिकुलर लोकल फाइल विद द जर्मन अथॉरिटीज कि जर्मनी ने कितनी ट्रांजैक्शन करी, किसके साथ ट्रांजैक्शन करी, किस मेथड पे ट्रांजैक्शन करी, किस अमाउंट पे ट्रांजैक्शन करी. एंड दैट्स द सेम थिंग एज समथिंग कॉल्ड एज टीपी स्टडी. So OECD said that you have to introduce these three things. OECD said that आपको ये तीन चीजें डालनी है, and these local file is what something India already had. Local file India में already थी, which is basically called as the TP study out there, study report जो है. Then OECD said that you have to have something called as the master file. Master file is like a high level overview of the business कि global business operations क्या हैं, global transfer pricing policies क्या हैं, supply chain etc, R&D centers. So globally क्या policies file होती हैं, that is something called as the master file out there. And then there is something called as country by country reporting. Now, country by country report, which is called as the CbCR will be filed by the German entity in the German tax authorities. So CbCR is filed, by the parent entity out there. So parent entity for us is Germany. So it will be filed by Germany in German tax authorities only. And what will it say? Well, CbCR will say that I am the parent company, which is Germany. I have two branches, which is one in India, one in China. They will say in India, this is the revenue that I'm making. In India, this is the profit before tax. In India, this is the income tax that I'm paying. In India, these are the number of employees. In India, this is the asset that I have, etc. And in India, this is the retained earnings that I have. Then that CbCR will say that I also have a branch in China. And in China, this is the revenue that I have. This is the profit before tax. This is the income tax that I've paid in China. These are the number of employees that I have in China. And this is the stated capital and tangible assets in China. So what will CbCR do? CbCR will put in all this information for all the branches that the German company has. So that is what the CbCR is. But CbCR बस एक बनेगा और वो बनेगा parent entity. Only one CbCR will be there and it will be made by the parent entity and it will be filed in the parent entity's jurisdiction. So that is basically a CbCR. Any questions?
Ma'am, since we have to file the local file, then why do we need to maintain that 10D documentation also? Won't it be duplicated?
It's the same thing. That's fine.
Okay.
Yeah, even if you file TP study, it's fine. That requirement for local file is there.
Okay, so it is like maintain this plus this, but that TP study acts as a base for local file filing.
Absolutely. That is the local file.
Huh.
Yeah. So these local file and master file, they have to be filed. For our purposes, there will be 3 local file and 3 master file. 1 local file in Germany, 1 local file in India, 1 local file in China. Then 1 local file in India, 1 master file in Germany, 1 master file in India, 1 master file in China. But CbCR will be just 1 and it will be filed by the German tax authorities, by Germany company in the German tax authorities. So that is really the concept. Now, India really liked the concept of CbCR and India incorporated the concept of, OECD BEPS Action Plan 13. This is what OECD said. And OECD said that if you want transfer pricing documentation to be very strong, you can incorporate this in your local law. India used Section 286 and if you can read through, I'm just putting it on the chat box. So if you read through Section 286, it is Section 286 of the Income Tax Act, and India incorporated all these things. So India incorporated local file, master file, and the CbCR. On this particular slide, I have just provided all the forms and all the form numbers, etc. So if you see local file, what is local file? Form 3CEB and the transfer pricing documentation, which is the TP study, which is maintained as per Rule 10D. This is maintained as per Rule 10D, which was the TP study. So this is basically called as the local file in India. Then there is master file in India, which is Form 3CEAA and 3CEAA Part B. Then there is CbCR, which is Form 3CEAD. So that is CbCR. So India incorporated all these documents out there. Do you know what is the applicability for CbCR? Threshold for CbCR? When will CbCR be applicable? Guesswork? Any guesses?
मैम पेरेंट कंपनी होनी चाहिए
थ्रेशोल्ड क्या होना चाहिए पेरेंट कंपनी का? कितना होना चाहिए, कितने करोड़? Okay, so CbCR will be applicable only if the consolidated financial statements have a consolidated group revenue of more than 6,400 crore. So what they're really trying to say is that German entity का turnover plus Indian entity का turnover plus China entity का turnover, total turnover consolidated financial statements में अगर 6,400 से ज्यादा है तभी CbCR एप्लीकेबल होगा, अदरवाइज CbCR एप्लीकेबल नहीं होगा. So CbCR will be applicable if the consolidated turnover in the consolidated financial statements is more than 6,400 crores. So only if this, for if the turnover is more than 6,400 crores, only then this will be applicable. Otherwise, CbCR will not be applicable. What is the threshold for TP study, which is the local file?
1 crore.
Exactly. So it is 1 crore for local file in India. In India, CbCR is 6,400 crores. So only if this particular threshold is met, then it's going to be called as a CbCR. Then only you'll have to file CbCR. Now, there is also something called as the alternate reporting entity. Now, what can happen is that if the German entity says that I don't want to file CbCR, then it can elect another entity in the group and say that this is the alternate reporting entity. They will file the CbCR. So what they can do is any other entity in the group, उस ग्रुप में कोई अगर एक और एंटिटी होगी उस इंटरनेशनल ग्रुप में, so the parent entity can actually say that parent entity will not file the CbCR. It can be filed by someone else on behalf of the group instead of the German entity. It can be filed by the Indian entity, and then the Indian entity will be called as the alternate reporting entity. This is the time limit for furnishing of CbCR report, and it is basically 12 months from the end of the said reporting accounting year for which the report is being furnished. So you basically get 12 months. It's after 12 months of that particular accounting year that you need to file this particular statement. And the form is Form 3CEAD. That's for the CbCR. Now, this is just a statement, just a slide which says that what are the details that are to be furnished by the constituent entity. Well, अगर आप बोल रहे हो that the German entity will not file Form 3C, the CbCR, they are putting an alternate reporting entity, then first the alternate reporting entity will have to tell the tax authorities that I am the alternate reporting entity. So let's say German entity is the parent company, वो CbCR file नहीं कर रही. The German entity says that India is the alternate reporting entity. India will file CbCR on my behalf. So India becomes the alternate reporting entity. Now, to tell the tax authorities that, the German entity is not filing it, India is basically filing it, and India is the alternate reporting entity. For that, you have to file one more form, which is Form 3CEAC. And finally, this is the requirement for master file in India. So what is the threshold for TP study, which is the local file? Again,
1 crore.
1 crore, that's correct. What is the threshold for CbCR?
6,400 crores.
Absolutely correct. It is 6,400 crore. Now, this is the slide which basically says what is the threshold for master file out there. Now, master file is something which basically is divided into two parts. Now, master file is basically divided into part A, and master file, the form number is 3CEAA, putting it here. Form 3CEAA. This is the form for master file. And this particular form has part A and part B. Now, part A of the master file is to be filed by every person out there. If you are an international group and if you have, master file requirements, it's going to be filed by everyone out there. But then part B is to be filed only if the consolidated financial statements show, the revenue of 500 crores and during the accounting year, the value of international transactions exceed 50 crores or intangible transactions are more than 10 crore. So, saying this again, there is master file. Master file has part A. Part A is mandatory for everyone to file part A of master file. Okay. But for part B, there is a threshold out there. What is the threshold? Threshold are two. The first threshold is consolidated revenue of 500 crores. So German entity, Indian entity, and the China entity put together, the consolidated group revenue should be 500 crore. And there is a plus there. International transactions should be 50 crore or intangible transaction should be 10 crore. Saying this again, तो रेवेन्यू होना चाहिए 500 करोड़ का मास्टर फाइल के लिए, उसके अलावा इंटरनेशनल ट्रांजैक्शंस होनी चाहिए 50 करोड़ की. अगर इंटरनेशनल ट्रांजैक्शंस नहीं है 50 करोड़ की, तो इंटेंजिबल ट्रांजैक्शंस होनी चाहिए एटलीस्ट 10 करोड़ की. And that is the requirement for master file. That is the threshold for master file. So can someone quickly summarize the threshold for master file now? Can someone say it?
For part A, every person it is mandatory, and for part B, consolidated financial statements revenue is 500 crore or more, and in that international transaction is more than 50 crore, and intangibles is more than 10 crore.
Yes. The only thing is, yes, that's absolutely correct. I think the only thing is there is or out here. So either it's or international transactions for 50 crore or intangible transaction of 10 crore. You don't need both. You need one of these two. 50 crore or 10 crore, इनमें से एक चीज चाहिए है. Only need one of these two, but 500 crore is mandate.
मैम 500 exceed 500 crore.
Yeah, exceed 500 crore. Okay. Any other question? Okay. So now just to summarize, the threshold for TP study is 1 crore. The threshold for CbCR is 6,400 crore. And the threshold for, master file is 500 crores plus international transactions of 50 crore or intangible transaction of 10 crore. So that is really the requirement for master file in India. Now we have this slide on transfer pricing dispute, and this talks about a lot around dispute resolution mechanism in India. Now there was a time, I don't know if you guys know, but in 2012, India had the highest level of litigation in the world when it came to transfer pricing. There were about so many cases. The number of cases in transfer pricing in India were about 5,000, more than 5,000 cases out there. And it was, India was the highest when it came to transfer pricing, litigation in the world in this particular year. And, the kind of cases that we had for litigation were comparables. If you guys remember last evening, we were discussing that I think that, these are the 10 comparables for me. The transfer pricing officer used some other software and they said that, no, these are the, comparables for you. So it was all around selection and rejection of comparables. That was the kind of disputes that we had. But now it's pretty settled, and the kind of disputes that we have in transfer pricing now are, very complex topics relating to, let's say, intangibles, or there is location saving, management transactions, loan guarantee transactions, etc. So when it comes to a transfer pricing dispute, it is actually under section 92 CA, the AO, the assessing officer, they can actually tell the transfer pricing officer to determine the arm's length price, but they have to take the approval of the principal commissioner of income tax or the commissioner of income tax. Then when the transfer pricing officer, the TPO, actually gets the case, they will notify the taxpayer. They will tell the taxpayer that you have additional evidence, or how should I, you have any additional evidence to support the transfer price, etc., to support the arm's length price, etc. And then the transfer pricing officer will determine the ALP of that particular transaction. They will ask for the taxpayer for all the information, etc. Whatever information that they get from the taxpayer, using that information, they will determine the arm's length price. It's very interesting that, even when the transfer pricing officer is just going through your case, even if they find any other transaction, maybe you've not reported it, or, maybe you've reported it wrong, then the transfer pricing officer, they can determine the ALP for that transaction also. And finally, when the TPO determines ALP, they will give out an order, and that order will be binding on the assessing officer. And now the assessing officer will, just pass a draft order, and the assessing officer will use the ALP, which was computed by the transfer pricing officer. So this is really the reference to the transfer pricing officer. This is section 92 CA. It just basically says that AO जो केस है, जो मैटर है, वो ट्रांसफर प्राइसिंग ऑफिसर को रेफर कर सकता है, और ट्रांसफर प्राइसिंग ऑफिसर उसका ALP डिटरमिन करेगा. नाउ हाउ विल दे डिटरमिन द ALP? They'll also use those softwares, etc., and they'll take information, they'll ask for information from the taxpayers, etc., and they will just calculate the ALP of that particular transaction.
मैम,
And then
AO TPO के पास जा सकता है?
AO किसके पास जा सकते हैं?
TPO के पास मैम.
उनको रेफर करते हैं केस.
हाँ मैम, assessee भी जा सकते हैं क्या मैम?
जब केस खुलेगा, so then the AO actually refers the case to the TPO.
नहीं, अगर AO से हम अग्रीव्ड हो तो assessee भी जाके TPO से हेल्प ले सकते हैं क्या, या मांग कर सकते हैं कि मुझे TPO को रेफर कर दिया जाए?
नहीं, because AO जो ऑर्डर देगा, then you go to the next step, basically CIT appeals या DRP, etc.
ये मतलब TPO सिर्फ AO की हेल्प के लिए होते हैं?
I mean, वो उनको डिटर्मिन करेगा, बेसिकली AO को हेल्प करेगा, और जो कंफर्मिटी होएगी उसके हिसाब से AO पास करेगा ड्राफ्ट ऑर्डर. एनी क्वेश्चन?
मतलब TPO के भी कॉन्स्टिट्यूशन और डिपार्टमेंट के थ्रू ही होती है, मतलब डिपार्टमेंट के ऑफिसर होते हैं TPO?
बिल्कुल बिल्कुल. जस्ट दैट उनको ट्रांसफर प्राइसिंग में वो स्पेशलिस्ट्स होते हैं.
ओके.
Okay, the next thing under dispute resolution is, something called as the safe harbor rules. If I give you an example, then you read it, it'll become very easy. Otherwise, it might just feel very technical. Now, remember we were doing the cost plus method, and I told you what was the controversy in the cost plus method. किसी को याद है cost plus method में controversy क्या थी?
The question was, we had a cost incurred of say 100 crores, but we were confused of the markup percent, like how much percent would be appropriate, which will help us compare it with uncontrolled transaction and help us avoid any further transfer pricing adjustments.
Absolutely correct. So the controversy in cost plus method was always the plus. What is the margin out there? Now, the taxpayers, they said that, a margin of, let's say, 15% is actually enough. But the transfer pricing officers always said that, no, we need a margin of at least 24%. And, there was so much litigation in the country. Taxpayers, wo bar, justify karte the that, 15 to 18% is actually enough in terms of, the margin. And the tax officers really always used to say that, no, 24%, 25% is what we actually want. So there was always like a clash, and there was so much litigation out there. So now what the tax authorities in India have done is that they've come up with a safe harbor rule. What is this safe harbor rule? Well, what they've actually done is the income tax authorities have said, are you providing, let's say, software development service? I say, yes, I am providing software development service. Then they say that the markup that you should have is basically should not be less than 20%. So it should be 20%. Then they say, are you providing IT services? I say, yes, I'm providing IT service. Then they say that the markup should be 22%. Then it asks me, or, are you providing contract research and development service? I say, yes. Then the income tax authorities have said that the markup should be at least 24% out there. Are you providing BPO services? Then the markup should be 18% out there. So what they've done is the income tax authorities have come up with these safe harbor rules. What are these safe harbor rules? They say that if you're providing these services, then this is the minimum markup that we actually require. So now, because they've just provided it so expressly, that basically means that the disputes will actually come down. So the income tax authorities basically say that if these are the services that you're actually providing, well, then this is the markup that you should be, maintaining out there. So then for, different services, if you actually, if you actually read through the safe harbor rules in India, this is just a screenshot that I have, provided from the safe harbor rules out there. So if you actually read through the safe harbor rules in India, it will basically just tell you that if these are the services that you are performing, then this is the markup that you must be maintaining. So if I am providing, let's say, IT services to my USA company, and there is a cost, and then there is a markup that I need to maintain, the income tax authorities will actually tell me that, the markup should be, let's say, 18% out there minimum. So if it is less than that, I know that for sure my case will be opened up and there will be scrutiny and there will be, disputes, etc. But if my markup is more than 18%, then I know that this will be accepted by the income tax authorities and they will not question it at all. So what they've done is they've defined some circumstances out there. And under these circumstances, the tax authorities will accept the transfer price without any transfer pricing adjustment. Those are called as the safe harbor rules. Any questions?
हम सेफ हार्बर रूल की एप्लीकेबिलिटी कहाँ होती है, मतलब कौन कौन से ट्रांजैक्शन में होती है, इंटरनेशनल ट्रांजैक्शन?
Abhi, just give me 2 minutes. So now can you tell me what are the advantages which are coming out of safe harbor rules?
लिटिगेशंस कम हो जाएंगे.
Absolutely correct. बिल्कुल सही. और yes, that's correct. Litigation कम होगी. Self assessment procedures automatic हो जाएंगे. Compliance will be very, very easy because now what you'll do is you don't have to, justify that 18%. Now you'll just say safe harbor rules say 18%. This is the reason we're taking 18%. And obviously usse reduction in compliance cost hoegi. So the compliances will actually come down. Now these are, generally the services for which safe harbor is applicable. And these are the services that have been chosen because there was a lot of litigation in these kind of services. ये services इसीलिए ही choose हुए because इन services में maximum litigation थी, इसलिए ये services choose करी. So software development services, IT services, KPO services, contract research development services, intra-group loans, intra-group services, etc. So these are the services for which a safe harbor is applicable. I have provided a link here. I will copy paste it to the chat. You can just look at this particular link because this is where the income tax department has provided for all these, services. It's in the law itself, but these are really the services. And I've just provided an example right here on what are the services for which safe harbor is basically applicable. Transfer price means ALP. Yes, exactly. So either it will accept the transfer price the meaning of transfer price right here basically means ALP, because they will not challenge that particular percentage out here. So this will be accepted by the tax authorities. So that is basically safe harbor rules. Okay. Any questions?
मैम प्रिस्क्राइब परसेंटेज से ज्यादा प्रॉफिट होगी तो भी हम उतना
अच्छा है.
डिक्लेयर कर सकते हैं। हाँ।
Yeah, that's a very good thing if it is more than that. Okay. Any other question?
मैम कहीं हम टैक्स वाली डे में हमारी कंपनी फॉल करती है और उस जोन में हमारे प्रॉफिट कम हो रहे हैं तो फिर भी हमें इसके प्रोविजन मानने पड़ेंगे सेफ हार्बर के।
Sorry, can you go again? Sorry.
अगर मैम कहें जैसे एसीजेड होता है या कोई ऐसे इंटरनेशनल फाइनेंशियल सेंटर जो बने हुए हैं टैक्स गिफ्ट सिटी, तो वहां पे मैम हमारे प्रॉफिट कम होते हैं तो भी क्या हमें इसके रूल को मानने पड़ेंगे, सेफ हार्बर रूल को मानने पड़ेंगे?
सेफ हार्बर रूल्स एसडीटी के केस में खाली सप्लाई ऑफ इलेक्ट्रिसिटी के केस में चलेगा. सो फॉर एसडीटी ट्रांजैक्शंस they've just mentioned these transactions. Only this will be applicable.
ओके।
Yeah. What we'll do today is, because these topics are a lot, and I think we're left with the next topic now, which is APAs. We'll take a very, very short 5-minute break here. And I think after APAs and secondary adjustment, we'll take another 5-minute break after that. So if that's okay, we'll just take a 5-minute break, come back by 7:11, and we will start with APAs. Is that okay?
ओके।
Yes,
Yeah,
ma'am.
for 5 minutes. उससे ज्यादा नहीं. So now, the safe harbor rules that we discussed, as I mentioned, was for you know, for basically identifying the price or the margin at which the transaction will be undertaken. Now, what we have is something called as the advance pricing agreements, or something called as APAs. Now, APAs again was like a dispute resolution mechanism that was there for transfer pricing for international transactions. What does transfer pricing, what does APA really do? First, you listen to me, and then I think the concept will become very, very clear. So I'll tell you everything about APA that's there. Now, as I mentioned, there was a lot of litigation with respect to whether this comparable is right or not. So let's say I filed Form 3CEB and I maintained the TP study, and I had chosen, 10 comparables for my transaction. Now, the TPO said that no, these are not the right comparables for you. These are the other comparables for you. Or let's say this is one, controversy that was there. Another kind of controversy that was there is, let's say I selected CUP as my method, but then the transfer pricing officer said that no, TNMM must have been the right method. So, on method, there was a lot of litigation. So, on all these kind of things, on choice of comparables, on the choosing of method, etc., there was so much litigation out here, and that's the reason they came up with something called as the APA basically means that the tax authorities and the taxpayer, they will both sit together, and what will they do? Well, they will decide that advance of the transaction, that going forward this will be the method that will be as accepted, these are the comparables that will be accepted. So what they'll do is, if today they sit together, it's basically like an agreement between the tax authorities and the taxpayer. What will they do? They will sit together today and they will decide that going forward for 5 years, when the transaction happens, they decide that this will be the number of comparables, these will be the comparables, and this will be the method, and we will basically accept it. So the tax authorities and taxpayers, they sit together and they decide that this will be the method, this will be the comparables, and for 5 years, tax authorities will not say anything to that particular method that they actually decide. That is basically an advance pricing agreement or an APA. I'll say that again. So in case of APAs, the tax authorities and the taxpayers एक साथ एक agreement करते हैं कि next 5 years के लिए ये वाले comparables होंगे और ये वाला method होगा and ये accept हो जाएगा. So this is what they decide in advance. That is basically the APA program out there. So can you tell me what are the benefits of APA? Okay. Any confusion? Should I explain that again? What are the benefits of APA?
There will not be any ambiguity in the
Yes.
So certainty will be there, and no more. It will be hassle free.
Yes, absolutely.
Yeah.
And there will be no risk of audits, and the compliance burden will also be less. So you know
Okay.
what you can do going forward in year one, if you have that transaction, don't justify that transaction. Say that this transaction is covered by APA.
Okay.
Year two, you have that particular transaction, just don't do anything. Just say TNMM. Why TNMM? APA has been covered for this. APA says TNMM. So it's
Okay.
going to be so easy. Yes, you're absolutely right.
Thank
Any
you.
other benefit that you can think of? Anyone else?
Litigations can be avoided, or
Yes. Anyone else?
as you are sharing it will be a risk, reduced risk of audit, eliminates the risk of audit.
Yes, exactly. So a lot of reasons why why people can actually get into APA. Now, the thing is, who can actually apply for APA? Well, if you have an international transaction, you can apply for an APA. It's similar to advance ruling, but there are a few complexities that we will talk about. It's a little different from advance ruling. Because in advance ruling, the transaction is more like the transaction which will happen for that. And in this one also, the transaction has been going on since, some time now. And because that particular transaction was in litigation, this is the reason that you come up with APA in this kind of, situation. So if you have an international transaction, you can go in for an APA. The process is very simple. The application is called as 3CED. I've written it here. This is the application which is called as 3CED. Now, in this particular application, before, this is the application for APA, and you will have to first do a pre-filing consultation. A pre-filing consultation will be saying that, these are the transactions that we have, these are the transfer pricing issues that we have, and for these issues, we need to take, the APA. So that is more like a pre-filing consultation. And after that, you can pay some fee and you can apply for an APA out there. Now, when you actually apply for an APA, it's actually the APA is, this one. So the APA, as I mentioned, is for 5 years. That means today I can sit down and I can decide that for the next 5 years, this is what my transfer price or my comparables or my method will be. So you get tax certainty of 5 years. 5 years के लिए आपको पता लग जाएगा कि ये आपके मेथड हैं, ये आपका प्राइस है और ये आपके comparables हैं, etc. Now, APA program also goes back 4 years. There is something called as a rollback provision in APA. Rollback provision in APA basically means कि अगर मैं आज बैठी हूँ तो मैं पिछले 4 साल के लिए भी certainty कर सकती हूँ. So if I sit down today with the tax authorities, even for the last 4 years for which scrutiny has not opened maybe, I can actually sit with the tax authorities and use those 4 years also to claim tax certainty. So total APA कितने साल cover करता है? How many years in total does the APA program cover?
10 years.
10? How 10?
Ma'am, 5 preceding and 5 consecutive.
Yeah, 5 preceding नहीं है, preceding 4 years हैं. So rollback of 4 years. Yes, rollback of 4 years. And then 5 years going forward. So you get a tax certainty of 9 years with an APA. And the only thing is that APA program is very expensive. So this is the fee. So if you have, transactions of 100 crore, the fee is 10 lakh. If you have transactions of 100 to 200 crore, the fee is 15 lakh. If you have transactions of more than 200 crore, it is 20 lakh. And then for one rollback, the fee is 5 lakh out there. So the fee is quite, this is what the fee is, but you at least get tax certainty in India from APA for 9 years. And you know that, if you actually apply for APA, all the problems are actually solved. There will be no litigation at least, for those particular 9 years. For 4 years going back, rolling back, and then the next 5 years out there, at least there will be no litigation in India. Any question? Okay. Now, what do you think APA is binding on? Who is APA binding on?
So binding on the authority, income tax authority.
Yes, that's correct. What else?
The assessee
Ma'am,
was
assessee पे
there.
भी.
Yes, that's correct. Yes, absolutely. So the APA is basically binding on this person who is actually taking the APA, and it is binding on the principal commissioner or the commissioner and income tax authorities out there. So basically, it is applicable on the taxpayer and the tax authorities, there. But what happens is, when I go in for a pre-filing of APA, I will tell the tax authorities that, listen, I have been having transactions with my with my USA subsidiary. So this is my transaction, like it's with the USA subsidiary. Now, what happens if there is a change in fact? Now, I have taken the APA for India USA subsidiary. Now, if you tell them that you have changed and now it is the India UK subsidiary, well, then the APA will not be binding because you had taken the APA for India US subsidiary. But now, if you say that no, it is actually the India UK subsidiary, well, then the APA will not be binding out there. So that is what this particular thing says. We call them set of assumptions. When we take an APA, we tell the tax authorities that these are the assumptions. These are the facts. This is how my transaction is. We tell them everything about our business there. Now, if there is a change in law or if there is a change in fact, and we've already taken an APA, then that will actually become redundant out there. So that is what APA stands for. You have to make sure that the facts that you have given to the tax authorities while undergoing an APA actually remain the same. Because if they change, well, then the APA will not be binding. Do you think the APA can be revised? Do you think APA revision is possible?
Yes, because there can be change in facts or terms for the transaction which you have undertaken as an APA.
Yes, absolutely. That's absolutely correct. If there is, a change in law, if there is a change in critical assumption, as I mentioned right now, I'm just doing transactions with the USA subsidiary. And now if I want to change it, I say that now it is with the UK subsidiary. I can obviously, take a revision in, the APA. So now revision can happen either from the assessee. So I tell them that, this has changed. Now I want to revise my APA. That's absolutely fine. But if the tax authorities, revise the APA, then they will always give you an opportunity of being heard. So that is what is provided on this particular slide. But yes, you can revise, the APA. And the APA can be cancelled also. When will the APA be cancelled? Well, when you don't file the APA reports, when you don't, comply by the terms and conditions which are provided in the APA, or, maybe there is no consensus. So, the tax authorities and the taxpayers sit together and there is no consensus on, the method or the comparables, etc. Then the APA can be cancelled also. This is a slide that talks about, sorry, हाँ जी.
मैम रिवीजन के लिए फिर मैं फीस देना पड़ेगा दोबारा या वही फीस काम करेंगे?
नहीं, रिवीजन के लिए फी देना पड़ेगा.
ओके, और कैंसिल के लिए भी मैम कोई टाइम पीरियड है, मतलब कब तक कैंसिल कर सकते हैं? अगर हमें आगे चल के एपीए मतलब मुझे रिवीजन में नहीं जाना है और मेरे टर्म्स चेंज हुए हैं, तो मैं मतलब वापस लेना पड़ेगा या ऑलरेडी वो कैंसिल हो जाएगा?
नो,
कोई
अगर
टाइम
आप
पीरियड
अगर आप टर्म्स एंड कंडीशंस फॉलो नहीं करोगे तो कैंसिल हो जाएगा.
तो कोई टाइम पीरियड है मैम, मतलब उसकी कोई टाइम
नहीं,
पीरियड?
नो, इफ यू जस्ट डोंट फॉलो इट, वो ऑटोमेटिकली कैंसिल हो जाएगा.
Ma'am, you said that fees is quite high for APA.
No, sorry, I take it back. I shouldn't put in opinions out here.
Sorry. Actually, the APR filing fee, this is per annum for 5 years, or it is for the contract period of 5 years?
It depends, how many years that you actually take it for.
Oh, okay.
Yeah.
Okay. So even we want, it can take for even less than 5 years also,
Yes,
like
yes.
2 years or 3 years.
Yes.
So this 10 lakhs, this is it up to 100 crores, 10 lakhs is per annum?
Yes.
Okay.
Yes.
Okay.
You have to, decide how many years that you actually take it for. But the maximum certainty in India is provided for 9 years.
Okay. Thank you.
Now, this is the slide which says, when is the application filed? Now, if you have like a continuing transaction out there, then you have to file the application before the first day of the previous year, relevant to the assessment year for which the application is made. But if you have, like remaining transactions ke liye, before undertaking that particular transaction, you will have to file, the APA out there. We'll discuss a question which will make this particular thing easier. Let's say that there is XYZ Private Limited and they have been supplying goods to its associated entities in foreign country. Okay. Because they are associated, it has applied for APA in respect of the transaction. Now, read these words, they have been supplying goods to an associated entity. Do you think this is a one-time transaction or it is a continuing transaction?
It's a continuing one.
Yes, it is a continuing transaction. Now, they say that the application for APA was filed on 15th March 2024 and the APA was signed on 2nd June. Application was on 15th March, but the APA was signed on 2nd June 2024. Which is the year from which it will be applicable? Well, if you look at continuing transactions, it's going to be first day of the previous year out there. Now, it's basically 15th March 2024. That means that for the year 1st April 2024 to 31st of March 2025, they filed it before that particular year. That basically means that the APA would be applicable for previous year 24-25 out there. So, and that is because they filed this particular APA before 1st April 2024. Hence, this APA will be applicable from 24-25. So that is what is provided here. Any questions? So what I'm really trying to say is that you don't look at the when it was actually signed, you look at when it was actually filed. That is the important date and not the date when it was actually signed.
Thank you, ma'am.
Yeah, thank you. Okay. Now we go to the next topic, which is a little technical, which is called as secondary adjustments. Before that, can someone tell me what is a transfer pricing adjustment? I think it's very simple. What is a transfer pricing adjustment?
Bringing your control transaction price to a ALP at ALP.
Yes, exactly. So what is what is basically, a primary adjustment or a transfer pricing adjustment is, let's say, I am transacting with my associated entity at, 100 rupees, but the ALP is 200 rupees. So what the tax authorities will do, they will add back 100 rupees to my situation, right? That is basically called as primary adjustment. Do you guys remember the first slide that we discussed in transfer pricing? There were two situations there. There was a related party and then there was independent party. And I told you that, when it actually, and I told you guys that when it actually comes to, like a related party and independent party, what they'll do is they'll add back the profits here. So they added back 40 rupees of profits and then they tax them accordingly. So that adding back of profits to make sure that they are in sync with independent parties, that is basically called as a transfer pricing adjustment. If you are not at ALP, and the transfer pricing officers increase your income, that is basically called as transfer pricing adjustment. Now any question? Now the technical meaning of transfer pricing adjustment is, the name is primary adjustment. Transfer pricing adjustment को also बोलते हैं primary adjustment. Okay, is this much clear?
Yes.
Okay. Now, what is secondary adjustment? Secondary adjustment basically means that now, actually, what I'll do is, to explain this particular concept, I'll go back to that particular diagram. Just if you can give me a minute, it'll just make it very, very clear.
मैडम फिर बीच में कुछ पूछ ले।
हाँ जी, बताइए ना।
हाँ मैम, जैसे सेफ हार्बर रूल के बारे में बताया मैम, वो हमारे अटेम्प्ट के लिए एप्लीकेबल है क्या?
हाँ,
मैम स्टडी मैट में लिख रहे हैं कि अभी तक नोटिफाई नहीं किया है, तो हमारे
नहीं,
स्टडी
वो
मैट के
कुछ ट्रांजैक्शंस नोटिफाई नहीं हुए हैं, बाकी ट्रांजैक्शंस हैं।
ओके।
So I think just give me a minute. Okay, is this visible? Can you tell me if this case study is visible? Okay.
Yes,
Yes.
ma'am.
Okay, great. Thank you. So now, if you remember this diagram, they had this related party, they had profit of 20 rupees. But these people, independent parties, they had profit of 60 rupees. So what will the tax authorities do? They will add back 40 rupees of profit here, and then they will tax related parties. So that 40 rupees of profit, which is actually added here, is basically called as primary adjustment. Now, that basically means that this 40 rupees will be added to the income and tax will be paid accordingly. But can you tell me something? Has the profit of 40 rupees, has that amount of 40 rupees, is it transferred really in cash to the related party? Is it really transferred? Or we are just presuming that it is transferred and then we are taxing them?
We are presuming it. It is not, there is no actual inflow or outflow of cash.
Exactly. So that basically is called as secondary adjustment. Secondary adjustment basically says that after primary adjustment has been undertaken, after that you know that your income is increased and now you are taxed on that increased income, the second step that you have to do is to ask your associated entity that now give me 40 rupees to my accounts out there. So what will happen is the tax that I have paid in my accounts, which is reflected in my accounts, that will be in sync with the amount that I have also received. So, जो मैंने टैक्स पे करा है वो और जिस अमाउंट पे मैंने टैक्स पे करा है that will be the same अगर वो अमाउंट आ जाए मेरे पास associated entity से. So the first step is there a primary adjustment? Yes, there is a primary adjustment. So in primary adjustment हमने assume कर लिया था कि हमने 60 rupees के ऊपर टैक्स पे करा है. This is what we assumed that 40 has been added और अब हमने assume कर लिया है कि हम 60 rupees के ऊपर हमने टैक्स पे करा है. That is primary adjustment. But now हम अपने associated entity को बोलेंगे कि हमारे को 40 rupees वापस दो. Give me 40 rupees back and I will show it in my books of accounts. That basically is called as secondary adjustment. So this is what it provides here. Secondary adjustment, it means an adjustment in the books of accounts of the assessee and the associated enterprise to reflect the actual allocation of profit, which is inconsistent with transfer pricing, which is determined as per primary adjustment, thereby removing the imbalance between cash account and actual profit of the assessee. So it basically says that give me back that particular amount of adjustment and of the profit, and that I will put in my accounts, and now my accounts will look balanced. That basically is called as secondary adjustment. So India introduced secondary adjustment in the year 2017. And this is only to ensure that cash profits of the taxpayer are in line with tax profits of the taxpayer following the primary adjustment. Can someone explain the second statement here? Can someone explain the second statement? What are cash profits and tax profits?
Cash profit is the actual profit, ma'am.
Yes. And tax profit is basically this particular profit here, 60 rupees. So what they're actually doing is cash profit should be equal to tax profit. Now this is the tax profit. What are we taxing here? What are the profits that we are taxing here? 60 rupees. But the profit should also be 60 rupees, no? So what they'll do is they'll add 40 rupees out here, and this cash profit will also become 60. So your cash profit should be equal to your tax profit. So that basically is called as secondary adjustment. Secondary adjustment basically means that particular excess money you should repatriate into India, and that basically is called as secondary adjustment. So what
रियल में पैसे आते हैं, मतलब एडजस्टमेंट होता है या फिर
exactly real में पैसे आए, that is called as secondary adjustment. That entry is basically called as secondary adjustment.
ओके
जब हमने प्राइमरी एडजस्टमेंट लगाया था, हमने प्रॉफिट के ऊपर, पूरे प्रॉफिट के ऊपर टैक्स कर दिया था, बट रियल में पैसे आए नहीं थे। सेकेंडरी एडजस्टमेंट का मतलब होता है कि अब प्राइमरी एडजस्टमेंट लग गई है, अब रियल में पैसे की एंट्री लेकर आओ, एक इनफ्लो लेकर आओ इंडिया में। इसको बोलते हैं रिपेट्रिएट करो पैसे इंडिया में, रिपेट्रिएशन इनटू इंडिया, दैट इज कॉल्ड एज सेकेंडरी एडजस्टमेंट।
इससे तो मैम फॉरेक्स भी हमारा बढ़ेगा।
या दैट्स अनदर थिंग, दैट्स फॉरेक्स, बट अमाउंट तो आएगा।
हम्म।
Yes, that's basically is secondary adjustment. Now, secondary adjustment is only applicable where the amount of primary adjustment is more than 1 crore rupees. The primary adjustment, if you, the primary adjustment out here was 40 rupees. It basically means that only if primary adjustment is more than 1 crore rupees, only then secondary adjustment will be applicable. Otherwise, it will not be applicable out there. Okay. Now, my question is, what if repatriation is not there? And they basically, the law basically says that repatriation can come from anywhere. It can come from any associated entity. You don't have to necessarily get it from that particular associated entity, from wherever around the world. It should just come to India. Kahin se bhi aa raha ho, but aaye. But now the question is, what if repatriation does not happen? What if the associated entity say that no, we will not give you money? What do you think will happen? Any idea? Can you guess?
There'll be interest on that particular transaction since the time value adjustment, and it's basically we are not complying with the cash profits in line with the tax profits.
Yes, you're absolutely correct. So what will happen is that we will presume that the Indian entity has actually given a loan to the associated entity, meaning to say that this 40 rupees, it should come back, right, to us. But if it does not come back to us, if this particular amount is not repatriated to India, we'll just presume that Indian entity has given a loan to the associated entity of 40 rupees, and now Indian entity will receive interest on this particular 40 rupees of loan, and that will be added to the Indian company's income out there. So what we'll do is, again, हम प्रेज्यूम कर लेंगे कि इंडियन एंटिटी ने 40 रुपीज का लोन दिया हुआ है एसोसिएटेड एंटिटी को, एंड इंडियन एंटिटी विल ऑब्वियसली रिसीव इंटरेस्ट, and that interest will be added to the Indian company's account as income. So unki income बढ़ जाएगी. That is what we will presume if there is no secondary adjustment. Now there is a time limit to कब तक पैसा आना चाहिए. In respect to the repatriation, there is a time limit out there, and this is Rule 10CB1, which prescribes the time limit, which is basically 90 days. The amount of repatriation should come within a matter of 90 days out there. If it does not come within a matter of 90 days, then there will be interest, but it should come within 90 days. Within 90 days of the due date of filing the return, or within 90 days of the transfer pricing order, etc. But generally it is 90 days. If, what is the interest amount on loan? The interest amount on loan will be 1 year marginal cost of funding of SBI plus 3.25%. And in case of LIBOR, it's going to be plus 3% out there. So that is basically, the amount of, interest that you will actually receive. So going back to the provisions, this is a slide that actually summarizes secondary adjustment. सेकेंडरी एडजस्टमेंट, सॉरी,
अगर मैम वो इंटरेस्ट भी नहीं देंगे तो फिर क्या करेंगे? अगर वो इंटरेस्ट भी नहीं पे करते तो मैम क्या करेंगे? फिर उसको रोल में करेंगे
इंटरेस्ट। हाँ, एक और चीज है, अभी मैं बताऊंगी, बट इंटरेस्ट बेसिकली हम फिर ऐड करते रहेंगे इंडियन कंपनी के अकाउंट्स में, और उसको
इंटरेस्ट अक्रूड एसेट में ऐड हो जाएगा ना।
यस. So what they're really trying to say is that this particular diagram says that if there is an Indian company and there is an associated entity and there is a transaction which is not at ALP, तो primary adjustment लगेगा. If there is primary adjustment which is more than 1 crore rupees, then secondary adjustment will come into play. Secondary adjustment will basically say that this particular amount of profit, the excess money, this is what you have to repatriate into India. If you don't do it in 90 days, well, do it in 90 days. But then if you don't do it, then we will consider that the Indian entity has given a loan to the associated entity. And then the interest on that deemed loan will be added to the Indian company's accounts. So that is what is provided there. Now, a lot of people were not happy with this. So the Income Tax Act has given one more benefit to them. What is the benefit? The benefit is that if you don't repatriate it, okay, don't do it. But what you have to now do it, this you have to pay additional tax. If you don't want to repatriate, don't repatriate it, but pay additional tax in India. What is the additional tax? They say pay tax at the rate of 18% plus surcharge 12% plus cess at the rate of 4%. So it becomes 20.9664%. So it basically means that if you don't want to give 40 rupees, don't give 40 rupees. Don't repatriate the money. But what you'll have to do is now pay additional tax in India. So on that excess money, on that 40 rupees, if you pay tax at the rate of 20.9664%, well, that will be enough. Then you don't have to repatriate anything. But whatever tax that you actually pay, which is this particular tax, that will be treated as final payment of tax. Then we will not ask you to repatriate. कोई repatriate करने की जरूरत नहीं होगी, but इस amount के लिए deduction नहीं मिलेगा. So this amount will be disallowed. This is like a additional tax that you have actually paid. Any questions? Okay.
Can we have the PDF for our
Okay.
reference?
This one?
Yeah.
Okay. So you want to go through this?
No, not one. That is, can we have the PDF for in our mail so that I can refer it back anytime?
I will be giving you the entire slide deck. I will be uploading the entire slide deck. So you'll have everything available.
Oh, thank you so much.
Yep. Okay. So this is what is secondary adjustment. Let's take an example to understand, this entire concept of secondary adjustment. Let's say why don't you actually take 2 minutes and just read it through? I think it becomes simpler when, you guys read it and then I will explain it. This is a very interesting question because it has everything that we've studied till now. It talks about all these things. So just take 2 minutes to just read through this.
We should read it aloud or?
No, just on your own.
Okay.
Okay, can we read it together now?
Yeah.
Okay. So in this question, we have on 1st April 2023, you can obviously change the year 2023 or 2024, but it says that on 1st April 2023, it was PQR Limited. This was basically an Indian company, and this advanced a loan of 6 crores to XYZ Incorporation. This was a company resident in Singapore. As on the date of the loan, the book value of assets in the books of XYZ Incorporation was 10 crore and XYZ paid the entire loan along with interest on 31st of August 2023. Can you tell me, just reading this paragraph, do you think that they are associated to each other or not? PQR and XYZ? Okay, yes, they are associated. Can you tell me the law which says that they are associated?
बुक वैल्यू से 50% से ज्यादा बुक वैल्यू के लोन किया हुआ है मैम.
Yes, exactly. 51% से, just remember, because आपको question आ सकते हैं जहाँ पे 50% का लोन होगा. So 50% will not qualify as associated entities. It's going to be 51% or more of the book value. Now, because in this case, it is 6 crores, which is, 60%. Hence, PQR Limited and XYZ Incorporation, they are associated to each other. Anyone who has a problem with this? Anyone who did not understand this bit? Okay, great. So this is what I've mentioned in this particular slide, that these are associated to each other. Now, during the financial year 2023-24, PQR Limited also entered into an agreement with XYZ Incorporation to provide 20,000 medical equipments at a cost of 7,400 per unit. So medical equipment was provided at 7,400 per unit. The assessing officer treats them at associated enterprises and recompute the income of PQR Limited at arm's length price. You are required to answer the following. If they are associated, yes, they are associated. Now calculate the arm's length price of PQR Limited, which sells the same equipment at the rate of 9,000 per unit to Y Limited and at the rate of 9,500 per unit to X Limited. Both of them are unrelated parties and PQR Limited is not a wholesaler dealer. So this is what you need to calculate. Now we know that PQR Limited and XYZ Incorporation, they are related parties. Now, they are supplying the commodity at 7,400 unit. But we have PQR supply it to Y at 9,000 and X at 9,500 per unit. So what method will you use to justify the arm's length price? What method should be used?
Resale price method.
Okay, anything else? Why resale price method? Okay, cup method.
TNM method.
Why TNMM method? I think we've got information available. Everything is the same. These are supplying at 7,400 per unit. And this is, like a supply out there. So they are supplying at 7,400 unit and they are supplying at 9,000 and 9,500, per unit. So don't we have information available for cup method?
Cup method is appropriate.
Yes. So we have information available for cup method out there that, to related party, they are supplying at 7,400 unit and to non-related party, they're supplying at 9,000 and 9,500 per unit. So how many comparables do we have in cup? How many comparables?
Yes. Five comparables.
No, 2 comparables. One comparable is 9,000 to Y and the other comparable is 9,500 to X, right?
I'm telling comparability factor, 5 factors you tell.
No, that is comparability factors. When I say comparables basically mean comparable companies. हमारे पास कितनी comparable companies हैं? 2, right?
2.
अगर आपके पास 2 comparable companies होती हैं, when you have 2 comparable companies available, do you use the range concept or do you use the arithmetic mean concept?
Arithmetic means concept.
Yes, that's absolutely correct. So what we'll use is the arithmetic mean concept. So what we'll do is we'll calculate the arithmetic mean of 9,000 plus 9,500. Can anyone tell me what is the answer?
9,250.
That's absolutely correct. 9,250. So what we are trying to say is that the ALP should be 9,250. But what is the price at which related parties have transacted? That is 7,400 rupees. They should have transacted at 9,250. But what is the price that they transacted at? That was 7,400 per unit. So how much is the difference? How much is the addition?
1850.
Yes, that's absolutely correct. 1850 is the adjustment. And how many units are there? There are 20,000 units. So what will be the amount of adjustment?
37,000.
20,000 into 1850. What will be the
3
amount of
crore
adjustment?
70 lakhs.
Yes, absolutely correct. It's going to be 3 crore 70 lakhs out there. It's going to be 3.7 crores. And what kind of adjustment is this? What will
Primary
this?
adjustment.
Yes,
Primary.
absolutely correct. This will be called as primary adjustment. So that basically means that there will be a primary adjustment of 3.7 crores. Now, because the primary adjustment is more than 1 crore rupees, that means secondary adjustment will also be applicable. Remember, primary adjustment, which is more than 1 crore rupees, then secondary adjustment will be applicable. So that basically means that now they will have to repatriate this 3.7 crores income to PQR Limited. They will have to bring back this 3.7 crores of money into India. What if they don't do it? What will happen?
It will turn into advance.
It will turn into an advance. It will be treated as a deemed loan, and they will have to pay, they will have to pay interest on that particular loan. So this is what is written here, because this is more than 1 crore. This will be, should be repatriated into India within 90 days. And if they don't do that, they have an option to pay additional tax. So what they can do is, if they don't want to repatriate, then on 3.7 crore, they can pay an additional tax of 20.966%. So they can pay an additional tax of 77,57,568. So they have two options. Either they repatriate 3.7 crore into India. Otherwise, they will have to, we'll just treat it as loan if they don't do it in 90 days, and there will be interest that will be charged. Or they can pay an additional tax of 77,57,57,000 rupees. So that is the entire concept of secondary adjustment. Any questions? Anyone who did not understand this?
Clear, ma'am. Thank you.
Thank you.
Okay.
Yeah.
तो मैम ये 77 लाख के मैम डिडक्शन तो नहीं मिलेंगे नहीं?
नहीं. This will not be available as deduction. Another thing that I'd just like to mention is that there was a question that, since this is a company, in the example, can we take 9,000 as, the arm's length price, because Y Limited is a company and X Limited is an LLP? Well, I can tell you that a comparable is a comparable, whatever it is. So I think it's best to actually take it as, like an arithmetic mean. That will give you the best answer, not otherwise. Because for two comparables, this is a mandatory thing to use in arithmetic mean. So you have to mandatorily use it. Now, the next topic, and I think the second topic that we have for today, and I think I'm going to just go on without a break. I just have 2 topics to go. Is it okay if I don't take a break?
Okay, ma'am.
Okay, ma'am.
Yeah, we can just, finish without the break itself, because we're just left with 2 topics now.
Ma'am, 1 minute.
Yes.
मैम सेकंड पार्ट में लिख रहे हैं ना कि मतलब PQR लिमिटेड इज नॉट ए होलसेल डीलर. अगर यहाँ पे होलसेल डीलर लिखते तो क्या फिर हम रीसेल प्राइस पे जाते मैम, या फिर भी कब लगाते?
You remember we were discussing in arithmetic mean, there was a fluctuation,
Yes,
1% and 3%.
Yes, ma'am. Yes.
This is why they've written wholesale dealer, because for them the fluctuation is 1%.
Okay.
Now the next topic that we have is limitation of interest deduction. Anyone who knows what is limitation of interest deduction? These are also called as thin capitalization rules, thin cap rules. Anyone who knows what this is? Putting it,
No.
I'm putting it on the chat box.
Ma'am, is this a strategy which is adopted by companies wherein companies borrowing a lot of debt first to increase their funding, and the main objective is to get that tax benefit of the interest cost which they pay to their lenders?
You're
Is it?
absolutely correct. Yes, yes, you're absolutely correct. It's actually that. So I'll give you an example. Now, let's say a company has two options. If it wants to collect debt, it has basically a multinational company has two options if they want to basically finance the company: debt and equity. What do you think the multinational company will choose? Do you think they'll choose debt or they'll choose equity?
हम डेट
Why?
टैक्स प्लानिंग के लिए
डेट फाइनेंसिंग के लिए?
टैक्स प्लानिंग के लिए
टैक्स प्लानिंग के लिए कैसे हुई टैक्स प्लानिंग डेट में?
मैम इससे उनको फायदा भी होगा, इंटरेस्ट भी मिलेगा और हम इंडिया में डिडक्शन भी ले सकते हैं.
Exactly, because debt में interest deduction होता है. So what I do is, if I take debt out there, if I finance my company through debt, and especially when we're talking about related parties, if I take like a loan from my related party, the best thing that will be that I will be able to claim interest deduction. Now, if I take a debt, what I'll do is I will tell the company that I will have to give you interest. So I will give the interest to my related party. If I give an interest to my related party, I will claim that as a deduction and my profits will actually go lesser. So that is a tax planning tool that is used by multinational companies. So, a lot of people, especially related parties, especially associated entities, what they started to do was that they were using maximum amount of debt available, and they were just able to claim like maximum amount of interest deduction, and sorry, bring their tax liability down. So this is the reason section 94B came up with something called as limitation of interest deduction. They said that if you take a loan from your related party, then the amount of interest that will be given as deduction will be limited. And what is limited, I will tell you, in a while. But I think the concept is, अगर आप related party से loan लेते हो, तो आप जितना interest deduction ले सकते हो, the amount of interest deduction that you can claim, especially under PGBP, will be limited. And what will be the limit? It's actually provided there. But this is what is section 94B, that if you are, claiming interest, if you're claiming interest expense on a loan that you have taken from your associated enterprise, then only, like a some amount will actually be given as deduction. Not all of it will be given as a deduction. So what will be the maximum amount will be given as deduction? That is actually provided here. But have you understood the concept?
Yes, ma'am.
Okay. The concept is because there was a lot of tax avoidance that was happening. Everyone started taking loans from their associated entities, and they started claiming so much exemption out there, so much deduction out there. And so this is the reason section 94B came into place. And they said that if you take loan from your related party, then your amount of interest will be limited. What will be limited? Well, they said that it's going to be, this is called as excess interest. Excess interest shall be non-deductible. It is interest paid or payable to AE for that year, or interest paid or payable in excess of 30% of EBITDA, which is earnings before interest, tax, deduction, amortization. So it's going to be या तो फिर जो interest दिया है वो, या फिर interest minus 30% of EBITDA, whichever is less, वो मिलेगा, वो नहीं मिलेगा basically. So this will be the excess interest out there. We'll discuss a question on this and it will become more clear, but this is basically the concept. And this will only be applicable जब interest amount exceeds 1 crore rupees. So this particular section will be applicable only when the expenditure by way of interest of similar nature, it exceeds 1 crore rupees out there. So only then this will be applicable. So this is what I've done is, this is one of the sheets that I've prepared, and then we will discuss an example on section 94B. But I
मैम
think, sorry.
मैम एक्सेस इंटरेस्ट लिख रहा है कि एक्सेस इंटरेस्ट शैल मीन एन अमाउंट ऑफ, तो ये और जो लगा रखा है उसमें इंटरेस्ट और एबिटा से 30% है ज्यादा, ये दोनों में से विच एवर इज लोअर, तो लोअर मतलब मैम कुछ भी हो जाएगा ना, फिर इंटरेस्ट तो कुछ भी फॉल करेगा, फिर पूरे इंटरेस्ट को डिसअलाउ करेंगे या एक्सेस इंटरेस्ट को डिसअलाउ करेंगे?
एक्सेस इंटरेस्ट को अभी बताऊंगी इस एग्जाम्पल में कैसे ये इतना जो था ये डिसअलाउड कर दिया. सो आई जस्ट टॉक, आई जस्ट एक्सप्लेन दिस बिकॉज इस एग्जाम्पल से बहुत क्लियर हो जाएगा. आफ्टर दिस एग्जाम्पल वील गो बैक टू द this particular part. Okay. So this is how the limitation on interest deduction basically looks like. It says, are you an Indian company or a PE of a foreign company? Because this particular section 94B is an Indian tax law, so it's applicable on an Indian company. If the Indian company borrows, if the Indian company takes a loan from the associated enterprise, then only it will have to give a loan. So are you a borrower? Are you an Indian company who is taking loan? I said no. Then section 94B will not apply. But if yes, then you have to see, are you a bank or an insurance company or notified NBFC? I say no, because on these particular things, on bank, insurance company, and notified NBFC, this is not applicable. So then it asks me, is the lender a PE in India of a non-resident engaged in business of banking? Because on banking, it's not applicable. So I say no. Then it says that, does that interest amount exceed 1 crore rupees? I say yes, because this particular section will only be applicable if the interest amount is more than 1 crore rupees. So I say yes. Well, then it says that the excess interest shall not be allowable as deduction. And what happens if it is disallowed? That excess interest, if it is disallowed, you can carry it forward for 8 assessment years when it can actually be allowed. So yes, that is what actually happens. Let's take an example to discuss what exactly is this excess interest out there. But is the question, is the concept clear?
I think if you work out, it will be more clear.
If I do the example?
Yeah.
Yeah, okay. Let's do the example and then we'll see if it is clear or not. I would request you guys to actually just, in yourself, read through this. This is an example from the manual itself, so you can read it in the book or you can read it on the slide here. Just take 1 minute and read through it. Okay, shall we discuss it now?
Yes, ma'am.
Thank you. So now this particular question talks about ND Limited. ND Limited is an Indian company and it has borrowed 90 crores from TM Incorporation, which at an interest rate of 10%. The said loan is repayable, for 5 years, etc., Further, this loan is guaranteed by TY Incorporation and Messrs. TD Incorporation, a non-resident. They hold shares carrying 40% voting power in both ND Limited and TY Incorporation. Now read at this particular statement. What do you think about ND Limited and TY Incorporation?
Ma'am, both are associate because
Associated.
voting power hold by same person.
Exactly. So these particular entities are actually related parties out there. So this is the reason I've written in the present case, since TD Incorporation holds 40% voting power in ND and TY, they are deemed associated entities. And if you see, sorry, this should be TY. So they have actually taken a loan from a related party out there. This is the reason now, because they've taken a loan of, from related party, and this is an Indian company that has actually taken the loan, thin capitalization rules will apply. So section 94 will apply. Why? Because what is the borrower company? Indian company. They have borrowed from an associated entity. Second thing is also established. Third thing is, do you think the loan amount is more than 1 crore rupees? Sorry, the interest amount is more than 1 crore rupees? What is the interest amount?
Yeah, it's 9 crores.
Exactly. It's going to be 90 crores ka 10%. So it's basically 9 crores. So this is established. Borrower is an Indian company, and they have taken a loan from an associated entity. And the interest which is paid is more than 1 crore because it is 9 crores out there. This is the reason, section 94 will basically apply. Now, if section 94 applies, it basically says that excess interest will be disallowed. Now, what is this excess interest? So for calculating excess interest, if you know, we need this particular figure: earnings before interest, tax, depreciation, amortization. So let's see what is the earnings out there. The earnings out there, can you see the earnings? Or the net profit? Okay, how much are the earnings?
11 crore.
Yes, exactly. So the earnings are 11 crore rupees. But the earnings are after debiting, if you see, the earnings are after debiting interest, depreciation of 5 crore, and income tax of 4 crore. And we need the earnings before that. Okay, so what we'll do is we'll add interest, which is 9 crore. We'll add depreciation, which is given in the question 5 crore, and we'll add tax, which is given in the question of 4 crores. So now the earnings before interest, tax, depreciation, and amortization comes to 29 crores. Is this much clear to everyone?
Yes, ma'am.
Okay.
Yes.
Yes. Now, what is the excess interest? Excess interest is lower of, if you go here, excess interest is lower of interest paid or payable for that year. So it is basically lower of interest paid or payable, which is 9 crore, or it is, total interest or paid or payable in excess of 30% of EBITDA. So that basically means total interest minus 30% of EBITDA. So that is basically 9 crore less 30% of 29 crore. Can you tell me what is 30% of 29 crore? Is this correct?
Yes, ma'am, it's correct.
Yeah.
Yes.
8 crore 60 lakh.
Yes. So the amount that you actually get is 30 lakh. So what is excess interest? Excess interest is either interest payable, which is 9 crore, or it is going to be lower of total interest less 30% of EBITDA, which is 30 lakh. So it's going to be lower of 30 lakh or 9 crore. What is lower? 30 lakh. So basically, the 30 lakh out there will be disallowed. So what is the interest that will be allowed in your PGBP? Well, the interest that will be allowed is 9 crore minus 30 lakh, because 30 lakh is disallowed. So the interest that will be allowed is 8 crore 70 lakhs. So that is section 94B. So, the entire, what they're really trying to do is that the entire amount of interest, which is 9 crore, that is way too much. 9 crores will not be allowed as, deduction, because you've taken a loan from your associated entities. So how much is actually allowed? 30 lakh will be disallowed, and 8 crore 70 lakh will actually be allowed in your books of accounts. And now this 30 lakh, it can be carried forward to subsequent assessment year, and it will be allowed going forward, looking at section 94B again, but it can be carried forward. So this is basically section 94. If we go back to this particular slide, now this is what is meant by excess interest, either the interest paid or payable, or total interest in excess of meaning minus 30% of EBITDA. So that is, whichever is less, that will be disallowed. Does it make sense now? Clear now?
Clear, ma'am. Clear.
Okay.
Thank you.
Ma'am, one question.
Yes.
In the example which you have given, you have said that 30 lakhs will be disallowed. But generally, when we calculate disallowances, like it is for 1 year only, but you said disallowed interest of 30 lakhs can be carried forward to subsequent years. I mean, what is the logic of this?
Because, next year it might happen that the amount of interest or the amount of loan might change. So then you'll have to do this calculation all over again and then see whether this will be allowed or not, whether this is lower or not. Okay. Any other question? So next year, if this question was there next year, I would have done this particular calculation again, and then I would have seen whether it is allowed or not. So that is how you can basically carry it forward to next year's. Okay. Any question? Okay, then the last topic that we have for today, which is also a little relaxed in terms of a topic, not very technical, is basically the penalty under transfer pricing. I don't think I have, much to explain in this particular situation, in this particular, slide relating to penalties, but it just talks about, this particular slide only will talk about penalties when it comes to transfer pricing issues. So when it comes to, there is an international transaction and there is misreporting of income, well, then the penalty will be 200%. Or if you don't file Form 3 CEB, local file, if you remember, or, accountant's report or the transfer pricing return, etc., that kind of thing, if you don't file it, the penalty is basically 1 lakh rupees. No, sorry, if you don't file it, or even if you file it late, the penalty is basically 1 lakh rupees. Or, if the TPO basically asks you for documents and you don't provide the documents within 10 days, then the penalty is 2% of international transaction. If you don't maintain TP study, remember I was telling you, you don't have to file TP study, you just have to maintain it. If you don't maintain that particular TP study, then also the penalty is 2% of the international transaction. So it's like a big penalty out there. Then, if you don't, furnish the reports under transfer pricing, then also there is a penalty of 5,000 and then 15,000. And then if it's a continuing default, it is, 50,000 rupees. If you don't give the documents to the transfer pricing officer, then, again, there are penalties under section 271 GB. I've provided them here, 5,000 rupees per day in case of continuing default, and otherwise it is 50,000 rupees per day if the default keeps on continuing. And finally, this is a penalty of CbCR. So if you don't, provide the correct information in CbCR, well, the penalty is actually 5 lakh rupees out there. And then there is, if you feel, if you give a justification that there was a reasonable cause for that particular failure, then there will not be a penalty involved, but then you'll have to, prove it and just provide reasonable cause of, delay or whatever, the penalties levied for. So that is really, the penalties which are provided under transfer pricing. I don't think I have much to explain in terms of penalty. It's just provided in the act itself. But if you have any questions, I'm just happy to answer them. Any questions relating to penalties? Okay, great. And I think with this, I wish you all the very best. With this, we finish with all the topics relating to transfer pricing. I think it was really like a very nice journey for me to interact with you all. I remember the first lecture that we actually started up with. We were just discussing, I think, very, very preliminary concepts, which was basically, if you guys remember, it was as basic as this particular slide. I mean, this slide was so basic. If you guys remember, this is what we've started with. And I think we've come to as technical topics as interest limitation, deductions, etc. So everything that we covered around, transfer pricing. I really had a very good time with you guys. I hope you had a good time as well and you learned transfer pricing, and you're able to perform very well in, exams. So all the very best to you
Yes,
all.
ma'am. Your lecture was super awesome, ma'am. It was very clear. Pretty
Thank you
clear.
so much. How sweet. Thank you so much.
Thank
Thanks
you
a
so much,
lot.
ma'am.
Thank you.
Thank you so much, ma'am. We had good concept clarity, and you have very patient to explain everything detail. Thank you so much.
Yes.
Thanks a lot. Thank you so much. All the
Thank
very
you, ma'am.
best for
Thank
exams.
you, ma'am.
Thank you.
Thank you,
Thank you,
ma'am.
ma'am.
Thank
मैम
you. Thank you.
Ma'am, and regarding the files, where will you be uploading actually? Is it in, will we be getting the links through the YouTube or?
I think I will just give it to the I will give it to the faculties at the DOS and they will, just provide it to you. So I'll
Okay,
give it to Aparna
because
or
we
मैम
don't get notifications also regarding classes. So it would be better if it is along with the YouTube below the comment link. It will be easy for us to download.
okay. So I will अशोक सर कहाँ पे अपलोड करते हैं पीपीटीज कहाँ पे अपलोड होएगी सबको स्टूडेंट्स को पीपीटीज चाहिए ये वाली तो कैसे दूं आप एक बार कंफर्म करके मेरे को बताओगे
मैम आप
आप एक
कुछ टीपी फॉर्म के लिए रेफर करने के लिए मैंने बताया था मैम कि कुछ फॉर्म्स के बारे में बता सकती हैं टीपी फॉर्म जो बढ़िया काम करते हैं मैम
एक मिनट सर वी डन विद द सेशन फॉर टुडे so we can stop the recording
मैम कुछ हमारे ना जैसे बीओएस के ऐप में ना मैम ये डाउनलोड नोट्स और डाउनलोड असाइनमेंट आता है यहाँ आपको नोट्स मिल सकते हैं क्या क्योंकि कुछ क्लासेस के नोट्स वहाँ पे मिल रहे हैं
ओके आप मेरे को बताओगे कहाँ पे
मैम
पीडीएफ अपलोड रिविजन